like moving average and MACD, and also has its own disadvantages. So you must know how to apply that. So in any case, in any indicator for that matter, there will be some advantages, there will be some disadvantages. So we should be in a position to bear out the advantages and disadvantages, or take all the signals, and if you do it consistently, then probably you still will make money. But in order to filter out certain uneventful trades or certain losses, we need to look at both the time frame for the super trend and also what type of indicator parameters that we should apply. And depending on our comfort of losses, we should trade the super trend. So when I mean comfort of losses, I'm going to say that in Nifty, if you only want the 30-40 pips difference, then you should go for one particular time frame. If you don't mind taking 85, 90, 100 rupees loss, then you can go for a higher time frame. And if you don't mind an investment of 250, 300 points in Nifty, then you can go for another time frame. So it all will depend on each individual trader's thing. So, but most of us feel that we should have the comfort of a small loss, but we should not have that much of loss, but we should get profit. So I think the trading itself is, since it's a risky game, we have to do it consistently, and psychologically we have to withstand certain losses in order to generate profit over a period of time to enjoy the type of return on the investment. So I think having come to trading, we should not be bothered about losses, but at the same time we cannot make imprudent losses. So what is very important is that we have to take trades consistently and then accept whatever that particular system gives. So whether we are doing it in super trend or whether doing it in moving average or any other indicator for that matter, that principle is something which should be guiding. That is, we should not vacillate from that particular principle, because sometimes during certain periods of volatility, losses and profits can keep coming, because right now we are in a situation where of a great global uncertainty, right? And one day it opens, it closes brightly. Next day it opens down with 2%, 3% down and continues to go down. Then by the time it looks like going down, then it revives. So yesterday itself is a very classic case in Nifty. It had if you look at it, so this was the first 15 minutes of fall. That's all. Just look at this 15 minutes, and the moment that 15 minutes, 30 minutes, it had a fall, and from there itself, it just reversed. The rally started picking up. So when you thought that probably the market is heading lower, immediately it turned reverse and went up on the upside. So these are the issues which are there in the market. So I think probably we need to be mindful of this before we get into any trade. So if you want to pass your trades in such an uncertain environment, you should do that. But if you want, otherwise, if you want to still be consistent, then we should adopt a very consistent policy both on the short side as well as on the long side of the market. Now, yesterday, it looked as if from a bigger picture. If you look at it. So we'll go for the daily chart. So this is the daily chart, right? So now cut off all these things. We will do the super trend here. Now super trend, normally they go for 10 periods with 10-3 is a normal. That is 3 times the volatility, or you can take 2 times the volatility. So this is the super trend in a daily time frame. This is a super trend in a daily time frame. So by itself it looks as if since this particular low has been cut, I think this itself shows that this is going to be a very important top. So I'm using now the super trend to identify some very, very important pivot points. Now the pivot point that I'm identified on the daily chart is too big. That is it is 16,410 here, and of course the 18,350. So you may say that this is too big of time. Yes, no doubt about it. But right now this particular thing gives me a feeling that any rally right now will be only corrective. Will only be corrective till such time this bigger time frame or something is going to be taken off. So for which we have to wait now. So what we should do right now is that to look at all resistance points for this. On rally, what are the resistance points that can come? So that is what our idea is going to be. Now, this 10-3 super trend, let us say, is a place where we are keeping this place, which is 17,490. So generally speaking, any rally should be contained within this 10-3 super trend, which is 17,490. So in this we can look at the time frame of the parameters of 2 and 1. 2. Okay. So the 2, this one now, since it has broken the 10-2 thing, and most of the time there is a rally up to that. So what we can think is that probably it can go up to this 10-2 super trend, which is around the 17,174. So I think the 10-2 super trend right now is coming at 17,174. Okay. So 17,174, 175 can now become a resistance in case if there is a bigger rally. So one place that you can mark is that since we know that this market is a falling market right now, and it can still fall to some other places, that probably we could head towards this particular resistance come support, which is 15,950 or so. So probably the next support can come closer to 15,950. But right now on a rally, we can say that 17,174, 175 can be a very important resistance. Now can we look at the 10-1 in order to find out which is the other resistance levels right now? So right now it's just at 10-1 super trend. If you look at it today, it went up, and right now it's at the place 16,792, 793. So 16,790 is a place from where itself it can revert. So it has not crossed even the super trend of 10-1. 10-1 it has not crossed. So many times we have seen that that particular point is crossed, but at the same time it goes up to this 2 times the super trend and then falls back. So right now there is a chance that if this is going to be taken off tomorrow on a close basis, we could see some rally coming up only up to 17,145 or 150, from where there is a chance that it can again fall. So right now it is still hugging the 10-1 super trend. So this is itself is one important resistance area. Now with the help of super trend, we know this is an important pivot high and this is an important pivot low. So with this we can draw the Fibonacci using Fibonacci right now. So using the Fibonacci, now we can find out the resistance area. So you can look at 16,715 has been crossed. So 17,020, 17,269 or some other important areas. So we have seen that 17,145, 170, 180 level itself is a resistance area in the 10-2 super trend. So right now we may have some rally even if it goes up. We will see a big resistance coming between 17,145 and 17,250, because there can always be a intraday high spike. Okay, so I think we should now look towards higher levels if it comes 17,145 to 17,245 as an important resistance level. Now we can draw the Fibonacci from the big top, which is this place. So see that there the 38.6% comes at 17,125, and that is where the 10-2 super trend is also there, which is 17,145 or so, and that is also the 38.6% retracement. So all in all, it looks as if we are looking at a very strong resistance closer to 17,125, from where the reversal can again take place. Now we have also illustrated earlier that there is a particular thumb rule. That is market either falls or rallies by 5.5% and then the reversal takes place. Only if it starts beyond that, then probably there is an extension to the next level. Now we have seen 16,202 right now. So if you look at the 1.0556 point, that also comes to 17,100 levels. So right now we should be looking at a very, very strong resistance which could come at any point of time closer to 17,125. So if you are looking at some sort of putting a bearish strategy, please wait till 17,125 and then put in a bearish strategy, and then probably you can look at some higher level to put in a stop loss, which could be 17,400 or so. Okay, so around the 17,125 you can look towards putting a new short position with a stop loss above 17,400 or so. So this is how you can use the super trend along with Fibonacci, and as well as some trend factors to identify the important support resistance levels, and also the likely area of resistance that can come in a correcting higher market. Now with the help of super trend we identified some important pivot lows. Okay, with the help of super trend we have also identified where all the resistances come. The first resistance is yesterday's high itself. Second, we will have here at around 17,125 to 140. So that is a 10-2 super trend. So we will use a 10-3, 10-2 and 10-1. 10-1 and 10-2 are used to identify the important support and resistance levels. 10-3 will give the important trend change itself. So right now on the 10-3 basis, it is coming closer to 17,400, 450 levels or so. So unless there is going to be a complete change about 17,400 or 450, we will definitely see the market even correcting lower, probably heading towards the 15,950, and then will the cumulative at that point of time all the economic conditions, global situations will dictate whether it has to fall further or the market will rise further. So this concept of super trend can also be applied, as I told you, in a shorter time frame. So we will look at a shorter time frame, hourly time frame. So this is the hourly time frame, and right now it is trading above the 10-1. It is trading above the 10-1 super trend. Okay, now we will look at the 10-2 and 10-3 where it is coming in order to find out the resistances in a hourly chart. So it has also broken the 10-2. So right now, I've seen this. If you see, once it broke the 10-2, it got support at that place. So the close was above this 10-2. So this is very important point that you must note, that in case if there is a fall again tomorrow, then in that case first this level, around this level will be an important support in an hourly basis. That is 16,520, 530 levels. Okay, 16,520, 530 can be an important resistance, because we have seen there is 10-2 it's a very important level. Generally very closer to that the market goes and then comes down. Now we can see this place where it took support, and this is a place where it is taking support, and some resistance areas also we have seen here before. So there's some support. So based on this we can look at these 10-2 as a very important area, and let us look at the 10-3 resistance in an hourly chart. So it is also crossed the 10-3. Okay, so that is where probably again the market has to come below this particular point, which is 16,400 level. So tomorrow if there is a fall, immediate fall, the first support that we will see is around 16,520, 530 levels, 520, 530 levels. Then after that we will see something like I'm talking about a bigger fall. Okay, then probably it could be the 16,395 or 400 levels. So 16,395 to 400 levels will be another support. So this is based on the 10-3 super indicator, where we are identifying. So we have seen earlier also that the 10-3 super trend, see here it took support. So once it crossed, then this became an important pivot point low. So now it went up, then once it crossed below this particular point, this became an important hit place. So right now we are, unless we see the market getting above 17,490. So 17,490 itself is becoming a very important place, which is also the daily high at some point of the time. So if it is going to cross below this particular place, 16,400, then probably this area itself, 16,815 itself, will become a very important resistance zone. So if it is below 16,400 on an hourly basis, then again also you can be short in the market with a 16,800 as a stop loss, with 16,815 as a stop loss. In an hourly chart these days, no, the entire thing is becoming because of the entire volatility. Now it's all no 300 to 400 points, because even in hourly, I think the range no, volatility range is around 100 points or so, more than 100 points. So because of this, we are getting a very big range for the stop loss. So you need to look at what you should do as far as the position is concerned, whether you got to go for a 15-minute chart or whether you should go for a slightly lower one. See now 15-minute chart also probably at many points of time I've indicated that no an important pivot points low support levels. So tomorrow also, if it starts going below this particular play, which is the 10, which is 16,619, 10-3 super trend is coming at 16,629. So if it's going to go below this particular place, then no, under 15 minutes breakout, then probably you can even go short below 16,620, 630 levels itself, keeping yesterday's high of 16,804, 805 as a stop loss. So it all depends on how you want to trade the market, what is your comfort as far as stop loss is concerned. So this is based on the 15-minute chart that we are identifying the important high is going to be 16,804 if it is going to fall first initially itself below 16,615 levels or so. Now we can look at this in a probably we can look at the 5-minute chart also. So based on the 5-minute chart, if you look at it, then probably you can also decide to go short even below 16,700, even below 16,700. So this is another way of doing it. So any 5-minute this one important pivot point you want to identify, then in that case you can identify that if there is going to be a fall below 16,700, which is a 10-3 super trend, then probably you can know that already high would have been made at this point, and you could have put it as a stop loss. Now the same thing can be illustrated here in a falling market. Now see here it crossed below this, right? So it crossed below this, so 16,630. So here you could have gotten short below 16,630, and you should have kept 16,747 as a stop loss. So 100 point stop loss. So similarly, if it is going to cross below 16,700 tomorrow, then you can afford to keep this particular high as a stop loss and trade, which is going to be 16,815 or so. So any 5 minutes fall below 16,700 is itself becomes a sell point, keeping 16,815 as a stop loss. So the the super trend becomes easier to identify some important pivot points, important pivot highs and important pivot lows, and also it is able to give some important resistance and support levels. To that extent you should use it. So also whenever you use a super trend, generally the entire idea of how they will say is, if it crosses below this, you go short. That means below 16,700 you go short. That's how it will be. If you take a mechanical indicator, it will say below 16,700. If there's a 5-minute fall below 16,700, it will show you have to go for short. But please don't do like that. What you should do is, you should wait something like this. You should wait for one pivot point. There is one pivot low has to be made. One pivot low means, see, this is one low. Okay, this is one low. It fell below this thing, but you have to wait for one pivot low to be made here. Once this pivot low is cut, then you should go for a short. Once this pivot low is made, you should go for a short. Okay. So here also, if you look at it, there was a fall here. So the market, it fell here, and once the pivot low is cut here, okay, you can go short. Keep this particular high as a stop loss. So you need to wait for some important pivot high, pivot low points to be crossed. And even if you wanted to go long, so here is a case where probably you could have gone long above this high, which is 17,148, above 17,148, and you could have put this particular low as a stop loss, 17,146 itself as a stop loss. So tomorrow what you should do is, ideally, once it falls below 16,700, if it is not with a big gap, if it just falls, then wait for some small revival, a pivot low to be formed. Then if it starts cutting that, then you should look towards going short. So in a 5 minutes time frame. So this is how we should look towards trading this market. So right now we are looking at some sort of a slightly neutral position as far as this market is concerned, because this low has not been taken off. So this is a very important low, 16,840. So the 16,840 itself has not been taken yet by the market, so it is only at this particular place. So we need at least a close which is above the 16,840 to feel that as if the correction could extend itself slightly on the higher side. So right now we should be looking towards break below 16,700, and on a 5 minutes basis, if it is going to sustain with a pivot low below that, then we should go short in that market with this particular high which has come till now as an first stop loss. Okay, subsequently you can move a stop loss depending on how the situation works, but this is how you should do that you can even do in a shorter time frame also. If you have the ability to do an algo trade, then it will be much easier. But right now those who can follow the market and do that probably can use a 5 minutes chart or a 15 minutes chart. So 5 minutes will be a little difficult for most of them to follow. So a 15 minutes chart probably will give you, but you cannot keep overnight positions at the present situation. So even in a 5 minutes, proper pivots are not being made. Proper pivots are not getting made. So no, you have to look at only a 5 minute chart in the particular time frame for even a pivot high low to be made, because straight away vertical rallies are taking place now. See, straight away a vertical rally goes up to this place. So very difficult to get even a pivot formation in a 15 minute chart or so. So unless you are trading with some sort of a Fibonacci number or so, most of this particular point rally probably could have been missed. So we need to understand from that point of view and trade this market accordingly because of the huge amount of volatility. So super trend in a way gives you a clear picture of the top and bottoms. Then it also gives you some idea about the support and resistance zones, and it is also a trend following indicator with its own disadvantages. So you should know how to use it. Now how to use it is that don't go blindly just because it crosses the below the super trend or above the super trend. Wait for one pivot low or pivot high to be made. Then if that pivot high or low is cut, then you go for a trade. Now let's look at the chart in a weekly time frame now to understand, or even a monthly time frame. So weekly time frame, in the weekly time frame itself, the 10-3 super trend has been cut. 10-3 super trend has been cut. So right now we are looking at further and further probable fall after some correction. Now the 10-3 this one is gone, so we need to be very, very careful, because most of the time before it takes a very long time to cut such 10-3 super trend. Once it is cut, we have seen for a considerable period of time, the market can head towards the lower side or higher side, depending on situation. Now we look at the hourly, monthly time frame also here. So in the monthly time frame, the 10-3 super trend is here. Okay, this is too high. It's a 14,906. So you have to look at where we are going to get the 10-2 super trend. So it is coming closer to this place, 15,950. So we are expecting some support closer to the 15,950. So very, very important that you must understand that once it breaks that particular super trend, okay, then if a pivot low is only cut, then you should go. For example, let us say this particular in a monthly time frame. So this got cut. Okay, so immediately the super trend signals in the normal indicators will flash a sell, okay, so we should not go for that. We should not go for such a sell immediately. Now we should allow, now a pivot low is made once the next bar is having a higher low than this, right? So once it is formed and once this again is cut, then we should only go for a short. Now here if you see, this is what we have done is a 10-2 super trend. Okay, so now here on this basis, if it starts to move above this particular high itself in this one, then we can even go long, keeping this low itself as a stop loss. Now even when the market pulled itself lower, okay, so once it starts to cut this particular, see, even in this particular thing, the pandemic time, it just fell that particular month. The next month it started to rally. So this is going long above this particular high is more prudent than looking for a short signal here. That is what I'm trying to say. That is once it's because this is a very important point to note. See, suppose market is like this and it cuts a super trend. Okay, it is like this. Let us say it cuts a super trend like this. immediately don't go for a short. That's what I'm trying to say. Probably this can have one pivot low here, then it may even start rallying. It may even start rallying and probably even go like this. So what we should do is that we should allow for a pivot formation to be made here. Once the 10-3 super trend is cut, we should allow a pivot formation to be made. So only when the pivot formation is cut, once the pivot formation is cut, then we should look towards going on the short side of the market. Okay, so that is what we are trying to illustrate in this chart, and we will also look at first we'll look at the XAU USD, then gold. All okay. See, gold, if you see the 10-3 super trend is now resisting this. If you just see very clearly, this 10-3 super trend, it went up to 1974. Okay, XA USD went up to 1974, and this got resisted by the 10-3 super trend, right? So here also, if you see this month, it fell below the 10-3 super trend, right? This month it fell below 10-3 super trend. Once it starts cutting above 1759, then 1676 itself becomes a stop loss, and it is a perfect level to go for a buy above this particular high, keeping that low as a stop loss. So, but in the normal indicator theory, this will say that no, go for a short here. That is not correct. What you should do is that you should look towards going long on this, keeping this as a stop loss. Now, once it has gone up to this level, up to that particular point, then you should look towards winding it up. Then you should look towards winding up the trade, right? So this is a classic case where the dollar should have been bought above 1756, and it should have been exited at 1974 when it went up to this particular level, keeping this low as a stop loss. And this we can illustrate in other places also. See, in the monthly chart, now you look at it, see, this particular month, it went up, right? It came down. Then next month it made a higher low. Then once it started to cut this, okay, then it became a serious issue. It became a serious issue, right? So this is what we want to do that. Now, let us say in this particular period also, if you look at it, now it went up. Then after that it came down, and this particular low, once it started to cut this particular high, then this month was the lowest. This month was the lowest. Similarly, this year, just see here. So that's how you should use it. Now we will look at this in a daily time frame also. Okay. Okay. Let's look at the daily time frame. Now, let's look at this particular time frame. Okay. So here it cut. Okay. Now once it cut, then probably you should look towards going long above this high, keeping this low as a stop loss. Here also, it just happened to fall, and this pivot low. So I told you, wait for one pivot low. And once this pivot low is, once this pivot formation has happened, then you should even look towards going long above this high, keeping this low as a stop loss. Now, in some cases, it will be, see here in this case, now, it rallied, then it came down, right? It came down. Now, you can go long above this 1802, keeping 1782 as a stop loss. It's very important that you should have this 1802 and then 1782 as a very important stop loss. Now once it started to cut, you have seen it's going down to 1721, and then you look at it, the resistance coming here, and probably from this particular level, you can either, if you are trading on the 10-3 super trend, you can use this, or if you want to use it on the 10-2 super trend, okay, fine, you can use it. So this is on a 10-2. This is we are using it on a 10-2. Okay, so 10-3 probably may give a slightly different picture about it, but generally, some traders use 10-2, some traders tend to use 10-3. But in case of 10-3, you may miss many trades, and so a lot of traders prefer to use the 10-2 super trend. So here also in this particular case, see what happened here in a 10-2. It went below this. So you would have removed all your positions here, because there was a pivot formation here. So you could have removed it. Now this particular trade, did not get removed even at this place, because it went up but it did not have a pivot point, so it came down. Okay, then only here, there was a cross above this 10-2 super trend, and in this particular pivot, probably you could have gone removed this particular trade. You could have even gone long, and that long you would have removed it here. Okay, and once that happened, then you would have gone above this particular long, and probably this area would have been the stop loss for a 10-2. Then after that, once it started to go above this particular high, which is the 1820. Since 1820, you are still on the long side of gold. Okay, so this I've showed using 10-2 super trend, which normally a lot of either you use a 10 to 10-1 will be a little slightly dangerous, which you can use it for a trailing stop loss. If you want, you can just use it 10-1 for a trailing stop loss if you want, or you can apply the same concept which I told you in the case of a 10-1 in order to get a slightly better benefit if you want. Say probably you can let's say 10-1. Whichever one you use, you can use it consistently in that time frame. This is 10-1, so probably you have a pivot formation here. So here itself we can go short, very clear pivot formation, and here the long situation is coming here, and here we have a clear short situation. Here we have a long situation, you have a clear short situation. So the long is emerging here itself in the case of 10-1 above this, so a pivot high above this, so we are getting it here, and here we are removing that position, and then we are going long above this position, and probably this place is where probably based on a 10-1 you would have removed it, and here again we would have gone long. So here probably this particular place we might have gone higher with this as a stop loss. So depending on how now you can put in a stop loss based on this low, right? Because this has crossed, so there's a pivot formation here. So you can keep 1878 as a stop loss for the trend which is on the upside. For the trend which is on the upside, you can keep 1878 as a stop loss. So you can use trades like this in order to do your trade in commodities as well. So we have identified this in the XAU gold. So you can use it in the crude oil also. Suppose you can use it in futures WTI crude. Crude oil futures. So this is the crude oil, which is in the I think it's in the Indian rupees. So right now it's just flaring. It is just like that, flaring up. So now let us say we can use we have used a 10-1 super trend here, and the reason that we have used is that we just want to have a pivot which is above the 10-1, and a pivot cross above the 10-1 we will use it for trading purposes. So now let us say this is a clear case where you would have gone long. So ever since that we went long, so I think right now only this particular low, which is the 67.79, is right now is where we are. So we need to look at probably next position in order to get out. So right now we are long in this market, keeping 67.79 as a stop loss in the daily trade. So let's look this at the hourly time frame. So we are now trading based on the hourly time frame. It will depend on to what extent you are able to accept the whipsaws. Now this is on the 10-1 time frame. So based on the 10-1 time frame, if this has happened, so probably you would have gone short below this. So that's a little dangerous. So you would have gone short here, this, and probably you could have you would have removed your positions above this. So this is based on the 10-1 with a pivot point low being cut below this. Okay, but if you are looking at 10-2. So on a 10-2 basis, it is above the 10-2. So it is also above the probably we should look at 10-3 also. See in the hourly futures. So here it is about 10.3, about 10.2. But it came below 10.1. So what you can do is that probably you could have removed a long position, need not have gone short. That's all, because the overall trend is on the upside. Okay, the overall trend is on the upside. So the 10.1 probably you could have removed probably as a trailing stop loss. You could have taken this particular place if you have gone long somewhere. This could have been a trailing stop loss. This could have been a trailing stop loss. And right now you will be still on the upside of the market based on this. So the 10.1 can be used as a trailing stop loss. Now here also, if you see this in this market, this 10.3 is on the upside. So now let's say we go to the 10.1 on the hourly chart. So this is a let us say this is a pivot low here, okay, below the 10.1. So what you could have done is, now you could have removed here also. So you could have removed the trade here. You could have removed any long trade here. You did not have waited for a much greater fall. So but it still is about the 10.3, right? So no, you don't need to go for a short. But you could have removed the trade below 10.1 with a pivot point below 10.1. You could have just removed the long trade, and then no, it just fell steeply. Then probably you can wait for again another uptrend to establish yourself on the long side of the market. So you can use your 10.3, 10.2 and 10.1 to synchronize that. If you are if you want to sum it up, it should be like this. That is, now market above 10.3, above 10.2, above 10.1 long. Okay. Now what you should do is that trailing stop loss is, if the market is below 10.1 and cuts a pivot point and cuts a pivot low you could be out. You could be out slightly in a bigger time frame. This could apply for a daily, or you can apply it for a hourly. For those charts slightly on a higher time frame. So if you are about 10.3, 10.2, 10.1, you can be on the long side with a trailing stop loss below 10.1 and a pivot low. So this is the formula that you can have. Reverse is the same. That, no, if it is below 10.3, 10.2, 10.1, you can be short with a trailing stop loss about 10.1 with a pivot I being cut. So this is how you can probably look towards trading this market. Okay. So now if you look at the same thing, whether it is going to be Nifty or Bank Nifty or in currency, the same application will be there. We will illustrate this, each one of that again probably on Friday, because I think if you go into a slightly detailed discussion, this will give you a wealth of ideas for you to do and how to do it. Now, because there's one important thing that we brought out in the super trend is, just don't go blindly for a buy or sell just because it has cut a super trend. Because in most of the indicator formulas, it will give that if it cuts above the 10.3 super trend, then you go long. If it cuts below the 10.3 super trend, you go short. No, most of the time that can be the bottom or top. So you will get frustrated. So what you should do is, you should wait for some pivot low also to be cut below that. So if it is going to, if you are using a 10.3 like what I showed you in the case of Nifty, it is coming out at 17,495 right now. So it is more than 1,200 points, 1,300 points from the bottom. So you will not be happy to do that. Okay. So what they probably will be looking to do is that, probably you will be looking towards slightly lower time frame. So the 10.3 in a hourly chart, okay, or 10.3 in a 15-minute chart. So if those things are cut, then you are long, but you are going to keep 10.1 as a 10.1 and a pivot point below that as a stop loss for that. That's how you're going to trade. So in any time frame for that matter, if you're going to do, keep that particular point, because if the market has fallen below the super trend from above, that becomes an important top. If the market cuts the super trend from the bottom above the super trend, that becomes a bottom. So in a shorter time frame, you can, the super trend will help you to identify very, very close support resistance points, as I showed you in a 5-minute chart in Nifty, as well as in an hourly chart. In a 5-minute chart, I showed you that in case if Nifty cuts 16,700 tomorrow, then the 16,820 which came will be a stop loss, will be a top. Will be an important top. In a 15-minute chart, if you are trading, a fall below 16,620 or 630 approximately, that level which is what we saw, could become a very important point, below which probably we will see the 16,800, 820 being accepted as a top. So it depends now on you to trade which time frame you want. So if you're trading on a 5 minutes 2% trend, even in Nifty, which will work out very well, you just keep that. In case if it falls below a super trend, then in that case the high from where it cuts the super trend below becomes a top. And now again, to reiterate that same point, I'll just show you the chart before I wind you up, and we can look at it again. So this is Nifty 10-1 super trend, and in this itself we have seen, in the case of a 10-1 super trend itself, we can wait for a pivot high or low to be made, and then a cut below that we can use it for a stop loss. Okay, now let us see this particular place. We have seen 10-1 cutting and then falling, right? So then after that we have seen this particular high being taken off. So that's a very important place. So tomorrow, when it starts to fall below this particular, which is 16,674 or whatever it is, then after that wait for an hourly low to be made. Then if it starts still cutting below that, then in that case we can say that in an hourly chart a big top has been formed, and we should be looking towards going something on the shorter side of the market. Okay, so this is on the basis of doing on the 10-1 place. Now in a shorter time frame, let us say in a 5 minutes time frame, now we will look at the 10-3, because it's a very short time frame, so we should look at 10-3. So in a 10-3, if you see itself, a lot of resistance supports are all coming. So now if you look at it in the 10-3 itself on an intraday, this was a support, important support, came closer to the 16,640. Now if it had only fallen much below that and a pivot low had been cut, then we would have had a much greater crash. So tomorrow when it starts to go below the 16,710 and it starts moving below that, then in that case you can look towards going short on the shorter side of the market. So this is how you should be doing the trading, and we will continue to illustrate that in Bank Nifty and commodities, Bank Nifty and stocks also on Friday. Thank you very much. Friday or next week. Super trend value is 10-3. Now see, there are three important values: 10-3, 10-2 and 10-1. Now 10-1 generally, it is better not to go for 10-1. That can be used for a stop loss, trailing stop loss. Generally it is better to use 10-2, and in a smaller time frame like 5 minutes and 15 minutes, it is better to use 10-3. So this is better to use in a 5 minutes, 15 minutes and all. And in hourly chart and all, it is better to use 10-2 hourly chart, and in daily chart and all, it's better to use 10-1. Okay. So any further questions you can ask me now. So thanks for the participation. See you on Friday, either with the same topic, but we will continue this topic again next week, if not on Friday. Thank you very much.